what I'm looking is I'm looking at these lows here and this low here. So it's kind of like three lows relatively equal. We went down below that so far today. We have SIBI here, sell side imbalance, buy side inefficiency. So we're watching to see how much of this range in here we want to revisit. Right now I'm showing electronic trading hours, so I'm going to toggle to regular trading hours. So you can see the difference in here. This is where we're opening versus where we closed yesterday. So there's a significant discount from yesterday's close to now this morning's opening. When it's this, well, prominent, I would look to the low of the last candle. So we'll be noting that here as well. So this is what I'm typically doing in the morning session that you don't see all behind the scenes and such. I don't have these levels really drawn on my chart unless I'm recording an execution so that way you can kind of like follow along. But the logic is we could revisit this here, and that in my opinion would be a gap closure. It doesn't require going all the way back up to yesterday's closing price using regular trading hours. Okay, so in short, what I'm saying is we have a soft bias to return potentially to 39.1450. That's my interest. That doesn't mean I'm going to go long. It doesn't mean that you should go long. It just that's what I'm watching. That's what I'm monitoring. So with that level here, I'm going to make that level black just so I can keep track of what it is for me. Now I'll make it a little bit thicker than I normally would. Okay. We'll drop back down into electronic trading hours now. All right, so now notice also by having that 39.1450 level annotated, which is the last candle of yesterday's trading before the session ended for regular hours, that also is really close to what on this candle's wick, consequent encouragement. So while it could dig up into this range more, it could go as far as this previous day's last hour trading candle and what happens to be consequent encouragement on that wick. So let's drop into a 15. On a day like this, where we have such a huge move overnight, your first rule of thumb is slow down. In fact, it's better for you to actually anticipate trading the afternoon session because the morning session, usually it chops around, it gives false moves, then consolidates and just does a lot of potentially seek and destroy. Seek and destroy is where it goes above short-term highs, below short-term lows, and goes right back to the middle. And then later in the day, there's this big expansion move where it draws to liquidity that hadn't been tapped for a while. So I'm not comfortable yet giving you a bias. Like when I tweet, I'm pretty much confident about what I'm saying because I wouldn't tweet it otherwise. And it's predominantly correct. Here, the rules and protocols that we're utilizing is right out of the notes, what I teach on my YouTube channel. My students have been with me for a long time. They know this is not something being form-fitted for today. Whenever there's a large move or a large range, the very next morning session, you have to be very careful not to try to go in and chase because we've had an expansion. And what that means is, look at the ranges here on these candles, the sizes. Okay, relatively small. And then as it drops, it gets large. So we had this big movement lower, attacking sell side. We've not been able to trade above the 39.7250 level. We failed to get above that here. And just overall this weakness rolling overnight. Because it's moved so many handles, and a handle is a point. One point would be 38.71 to 38.72. That's 4 ticks. We've moved about 90 handles or so. just almost about 100 handles. That's a significant price move, and to do it all in one session overnight in the London session going into the early hours of New York session, you just want to be careful. Don't try to chase it, in other words, and try to avoid trying to pick a reversal either. If I could go back in time and show you where I've done the most damage to myself, it's trying to chase these moves after they've happened. And you just got to be very, very careful not to do that. So I'm going to walk you through this morning as best as I can based on what we're looking at. But my interest, and I want you to know this going forward, my interest is in the afternoon session. So 2 o'clock to 4 o'clock in that 2 hour window. So you're probably asking yourself, why didn't you want to just do a live session then? Because I have a family and I have things I have to do today. So I'll be tweeting to everyone through my phone, walking around looking at charts from my phone. But it's important for you while you're here going through this mentorship to learn how to navigate. So that way when I stop doing these at the end of the year, second week of November, you'll have a procedure to follow yourself and rules that you've utilized, watch me utilize, and you'll understand why those rules and procedures are even in place.